Hey guys, welcome to section 2, market structure. And this is where things really get interesting. So, what is market structure? It's seeing the market through professional eyes. And after this, what we will be learning is how to identify the mathematical market structure, the geometric market structure. Okay. So, here's the thing the most traders miss. They look at charts completely wrong. They're starting at individual candles, trying to read every single move, and it's just chaos, pure noise. Right? See this candle after candle. Every 15 minutes it's chaotic, right? Going up, going down, you know, then going down, going way up, and then way down. Right? And if you're trying to make sense of every candle, you'll drive yourself crazy. Saying like, is it going up? Is it going down? Right? And it's where do I enter trade? That's where it becomes confusing. Okay. Now I'm going to show you a different way to see the market, a way that professional traders have understood for decades, but we're going to do it with modern tools and mathematical precision. Okay. So notice the shift in thinking here. Okay. Instead of asking, is this candle going up or down? We're thinking, let me wait for the market to finish its down move or its up move before I enter any trade. So basically, we are seeing the market in waves, okay, as waves instead of looking at individual candle. All right. Now, if I come here and I actually plot the wave here, this indicator you'll get access to. So as I add that, you'll see this wave structure forming, right? And let me actually, yeah. So, and I can also do Heikin Ashi candle here, where you can clearly see the wave so that, let the down wave complete, then we can enter, right? And this is where like things get very clear in your head that like, okay, now instead of looking at individual candle, I'm looking at the candle with the perspective of the waves. Okay. So wave have their own mathematical formation. We call it Elliott wave structure. Wave generally goes this. This is like 5-3 wave. So um, 1, 2, 3, 4, 5, and then when it retraces A, B, C. So 5 wave up, and 3 wave down. So if I can show you that example here. Um, well, this is very simple example. 1, 2, 3, 4, 5, right? And then A, B, C. Okay. So this is you can actually go ahead and like look couple of example there. For instance, on the 4 hour chart as well, we can look into it. See 1, 2, 3, 4, 5, right? A, B, C, and then again it's going down. Okay. And there is really good tool to analyze this, which is Elliott Wave Lux Algo. With this one. Yeah, this one. So once you see, this is what we also like figure out, right? 1, 2, 3, 4, 5, right? I mean, this is calculating mathematically, so you can see it might make some mistake, but yeah, I just wanted to show you that there are tools for that. So um, so now you see the chart suddenly makes sense, okay? But this does reduce the noise, This reduces a lot of noise and it tells you we're now in a down move or up move. So most of the candles you're going to see during this up wave will close higher, or most of the candle you will see on this down wave will close lower below this swing low. Okay. And it's simple as that, right? On an up wave, price goes up, and on down wave price goes down, and that's what we're figuring out in with this system. Okay. this wave system. Okay, so I'll just disable this and you can see this. And let me actually play this out in replay so that you can understand better. I'll just take this here and I'll update 15 minutes 10x speed. Hang on. Okay. Mm. 5x 15 minutes. So see, it's adding candle, and you can see as upwave goes, like most of the candles are closing up. That's why we call it upwave. On downwave, most of the candles are closing down, right? So this is how we can filter the market noise. Okay, and it's as simple as that. All right. So notice the shift in thinking here. Okay, instead of asking, is this candle going up or down? We are thinking, let me wait for the market to finish its down move, okay, or its up move before I enter any trade. And here's the key, this reduces the number of trades we take and increases the quality of those trades. Quality over quantity, that's our mantra here, okay? So now let me share the philosophy behind this. In market, pattern repeats, okay? It might surprise people based on how they look at it. But if you go back through enough historical data and analyze it, you'll find patterns that repeat. The market does what it has done before. Why does this matter? Because the patterns market create are mathematical patterns. Okay. And mathematical patterns are precise. Mathematics is precise. Everyone in this earth can agree that 1 plus 1 equals to 2. Okay, and price either increases or decreases. That's what the market does. Price goes up, we call it bullish. Price goes down, we call it bearish. And nothing more complicated than that. Okay, so here's how I want you to think about this, like a staircase. Okay, think of it as a staircase. Okay, imagine a staircase going up where every step is consistent. Okay, so if I draw a staircase for you, um, see here, have a line. And you can see here, the general trend of the market is up. And if I draw the staircase on the opposite side, you can see the general trend of the market is down. Okay, so basically imagine a staircase going up. Okay, where every step is consistent, equal height, equal depth, and you can walk up smoothly, confidently. Okay, now imagine someone gave you a staircase where every step is different size. You trip, right? You couldn't walk. Okay, so when the market forms these consistent steps, these wave structures, it moves in a predictable way, and this is what professional traders call the stair step pattern. Okay. So see, consistent steps, consistent height. Inconsistent means like you trip. Okay. So the stair step pattern, higher bottoms on each pullback means we are in an uptrend. Okay. So I'll just like quickly put this. So here, if I put the analogy, it's making higher high, right? Higher low, higher high, higher low, higher high, higher low. Here it's making lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Okay, so this is how um, you know the uptrend and downtrend gets defined. Okay, so see higher bottoms on each pullback, lower highs in each rally. In every aspect of life, what you when you want to analyze something scientifically, you got to define properties first. And this is the same with markets as well. We define the waves, we define the swing points, and we calculate the levels, all mathematically, no guessing. Okay. So so the question arises, like, when the chart comes to life. So this is how chart comes to life. Okay, what people miss when they don't have this is they don't know where their reference lines are. They don't know where the 50% retracement sits. They don't know if the long term perspective is up or down. And there are a lot of variables. This system removes that confusion by showing you the structure mathematically and automatically. Okay, and this is how the chart comes to life. So when we come here, if I remove this, you know, and I would again run it. Okay, and again come here, and now if I run, you can see we can't much expect the direction of the market. See, as it was going up, our brain was thinking, okay, it would go up, but then it went down and it keep going down, right? And if I again, I'll just go back and I'll just enable the wave. Now if you see it, it will suddenly make sense to you that, okay, when market tries to go up, then as soon as the downwave started, it just keeps going down. So subconsciously our brain knows that, okay, we are in the right direction of the market, which is it's going down. Okay, and in the future when we apply this structure, this one, you will see more that, like, how we can apply this principle to trade. Okay, so this we covered already. Okay, and once we start to apply this principle, trading becomes simple, and you're not fighting with every candle. You wait for the right moment to trade, and when the wave completes, when price reaches a key level, that's where you start to take trade. And that's the difference between trading and gambling, guys. Structure gives you plan. Okay, so now this is a concept isn't new. Professional traders have understood this for decades. Markets move in geometric patterns. There's a rhythm, a mathematical precision to how price moves. Okay, and what took traders years to draw by hand, we now can calculate automatically. Same principles, just with modern execution. Okay, so that's market structure, guys. Okay, and it's just like, as you see, it's making lower highs, lower lows, lower highs, lower lows, and it's just going down. Is as it making higher high, higher lows, higher high, higher lows? We see the market is uptrending. Okay, so it's seeing the market as waves, not individual candles. That's how we get successful in our trading. Okay, as I told you, in trading psychology, we are considering ourselves as warriors. Okay, not some retail traders. We are warriors here. Okay, now it's understanding that there's a rhythm in the market, a pattern, a mathematical precision to how price moves. All right, once we start seeing market this way, we'll never look at charts the same again. Okay, and that's exactly what we're building on in the rest of this section. So in the next lecture, we're diving into swing highs and swing lows, the building blocks of these waves. These are the points that define the structure, and this is where it gets really powerful. So I'll see you guys there.